Hello and welcome to the Money Charts channel. My name is Derek. Today is the date of Wednesday, the 5th of December, 2018. All trades, bets, and of the like within one's own risk and reward. Let's take a look at the stock market and gold. And I guess maybe the dollar index too as well, just because I haven't seen it in a long time. I don't even know what it looks like right now, although I have an idea. And I got this started off with the S&P futures contract, as if I look on here, I can see the Dow Jones lost 799 points on Tuesday, down to 25,000 or 3.1%. And I never even noticed that till this morning. And therefore, I thought, you know what, it might be a good time to just check and see what's going on. And well, what I seen was stocks recover. Okay, good. Those futures anyway. And that's exactly why I showed that chart, because it's not showing any signs of such event. So I know I was on the Canadian when they did a thing on interest rates. I don't know what's going on with that. I think they left them the same or something. And yeah, the futures here don't. It doesn't show recovery. It's just going sideways, recovering through time more than anything. So enough of that chart. Let's go to the Dow Jones. Then again, we're going to switch it over to that of gold. Choppy since the market changed its status, its story on October 4th. Because that's what I like the story. What is the message of the market? Because up to this point in here, everything was just within a nice uptrend within a correctionary move, because the market was at this high from here. So you had that choppiness, the same sort of stuff in here, and just a consistent uptrend. That was the market status there. Choppiness was the status in here, like we're having now. The status was a big decline after it broke the previous status, and that previous status was just a consistent uptrend. And the volatility, of course, we can see the size of those candles much smaller to the ones that have come into place for the year 2018. And of course, as we see it now. But when you got the key high, and there's a lot of them, you got key high, low, not such a great a high, it goes to the 18 lows. And then we say go to this low, this high, so decently below the lows, decently above the highs, decently below the lows, decently above the highs. Now it's at the 18 average of lows, close to it. So that's choppy, but within the strategy that I talk about, buy orders city down here, so opportunities to sell here, buying down here, definitely selling within this top, and after you sell here, your buy orders down here we get executed. They get executed, some buy order or some sell orders here. Now maybe you got a buy order ready to go right there. Of course, the volatility for such, you're talking about a range of going from about 26,000 down to, well, this buy order would be about 24.7. So that's only differential of like 5%. So I mean, you're not getting major gains, but that's why I like the crypto trading game overall, because of its higher moves that you can. I look at it as in 1 week of trading long term on cryptos is equivalency of several weeks, because it takes many weeks for it to have this 5% range, where cryptos have the 5% ranges intraday. Okay, so overall, again, when we look at this as a market perspective, it's mainly been going sideways through this range still. So established support in the down, this will be at 4 at 23,377-ish. We also have a little higher one, the more recent one at 24.3. And then established resistance is in at about 26,680-ish. And then, of course, the shorter one in about 26 even. Let's move on to gold. And I'm going to start with more of a longer term view and then shorten it down from this point on. And you really don't see too much in here. Like, oh, does this look good or bad? I mean, you can't tell anything. It's resisting this 18 average of lows. And it's decently low volatility. I guess the only thing you can see if you look at the last 3 periods is you come to the 18 average of lows. You have a little bit of a pullback. It follows through with consolidation amongst the 18 of lows. So I guess you could say that's showing strength at the 18 lows. And then continuation within this month as well, doing it 5 days into the session. So other than that, just like I was showing with the Dow over the year, sideways consolidation, big support here at around 1170, high 1100s, 1180, and then again the big low at 1060. And then 1060-ish, 1050 does coincide, of course, with the 1029 high. Is my memory good? I haven't looked at it for a while. 1032, I was off by $3. So it's a pierce above. But either way, those are the key support levels. Resistance we can see is huge, huge. I'm going to put a line there because it's just big there. Right there. As there has been just monstrous amount of tests there. It did so in the summer of 2013. Then again in March of 2014. And then it does it over 2 years later in the summer of 2016. Comes close last September, but then it does get there at the start of this year, January through April, and then has had a relatively small fall. Higher low from this, decently pierced above, but most certainly a higher low from the 1000 area, holding amongst that level, and within any key line like this, breaking out above this, just magnificent. On the weekly term time frame, now we're starting to see something very interesting. For within this, you have this high at April 16th, which is the last time it had seen the 18 average of such until, of course, last October or this October. And steady decline, just one tooth, period after period after period, noticeably below the 18 average of lows. And then, of course, the bottom comes in August, and then sideways consolidation for a little more than a half a dozen weeks or a month and a half. Establishing short-term support. And let's put another line in because lines are fun. Right here. And we can see that it came back to it. And it established a level of resistance from that point in here, barely above the 18 average. But after it hit the October high, 3 weeks later, it comes down within 18 lows is 11.98 and 1 penny, and the low was 11.96.46. So it pierced it by a little more than $1.50 lower. So pretty much an exact hit at that level. And then from there, 2 periods after it comes from the low, it rallied right back up to the highs within that week. 2 weeks where it congested it or corrected it very strong, as it stayed within the 18 average of highs for the next one. It resisted the highs again. It went lower, but it recovered it, and we can see it as now this week been able to break out above such that event. So that's telling me right now that this looks like it might be ready to go. I still would love to see, or need to see rather, this thing get above this high. For doing so and getting above this little area here, well, now we can be talking about making a move up to the previous high of like 1320, up to that line that I drew in at around 1370-ish. But I like the way this is setting up amongst the 18. If we just take a look at this even more short term, let's go to the daily next. And as we can see within this here, 1210, resisting 1, 2, 3, 4 times. And then when it had its fifth shot at resistance, it finally passed and it went below it. But when I say I want to see a market hold and stay above something, well, that's exactly it, because this failed breakdown, that's showing you how it failed to hold and stay below it. And then, of course, with new resistance lines right in here, you have the high that came in October 23rd, October 26th, had that fall, but came back just the next day to start November, and it stayed near that high for 7 days. And then pull back. And nice little lower high to here, but a lower high is not a problem because you can make a higher low. And it did that. So lower high, higher low, higher high. So that broke the symmetricalness. And now retest of previous level. That's where market status is now in getting the story. So testing this high, short-term support, and I can do that. Let's put another line in. Lines are cool. This is where it needs to hold and stay above. And I'm going to put it up more closer to the high. But yeah, you see getting above this, the chart pattern, you're in the 18, you're leaving it, you're at previous resistance. You got all of this empty space in here, you're breaking it. Let's fill some of that empty space. That's usually what happens. 4-hour time frame. So within this line in here, it's came up to this one, now down to the 18. Maybe it doesn't need that much of a price correction because all it has done is come piercing above the 18 lows. Many basis points below previous resistance. But even if, say, it doesn't get above this resistance now, and maybe this 18 average starts to flatten out, go sideways, and it consolidates between 1230 and the 1230s, and really for that matter, the 1235 to 1240s. So only that 5-point differential, low volatility. But still, nonetheless, if it comes back down, I've seen many situations before where it does something like this, then it just breaks down. Maybe it comes to this and maybe it pierces below to, like, say 1223 or something. Then it breaks above, thus making higher low here on November 28th, higher low November 30th, and if it comes down whichever date, higher low. And then obviously as we wait, that's what the big thing is. For the break of this resistance, you could probably have some decent gains. Let's quickly take a look at silver. Actually, did I even do short-term? I did short-term analysis, didn't I? Yeah. Let's take a look at silver and maybe the dollar. And silver, we look at this on the daily time frame. Continuation, I mean sideways movements big time. There's support. There's resistance. And it's in the middle part of this range. It's managed to get above the 18 average of highs over the last couple of days, holding it so far today. Thus, the 18 is starting to rally, both on the lows and the highs, starting to go. I mean, it's starting to rise and breaking higher. It should have that test of such. The weekly time frame for gold looks golden, or weekly time frame for silver. Well, maybe the 18 average will start to flatten out now, as we can see here, as it declined on June, and it's now been with correcting the 18 since September. Had to move up to the 18 highs, now the 18 lows, back yesterday to the highs. So that's enough to flatten it out, and really more than anything neutralize it. So that's an obvious tell, and it's not really a tell, it's just exact knowledge that mathematically the gold to silver ratio has to be climbing. And when we look at the daily time frame, well, it's doing very well, having its third support test of the 18 average of lows with 1, 2, and 3 since this last point. And even from that point, key low, key high, key low, so on and so forth. And when we look at this more long term, this does, and I've said this in my last gold silver video a week or two ago, I mean, this has got a nice weekly bullish pattern. A lot of reason you could think, well, has this got the availability to go off? Well, I like lines. Let's put one in. I've been putting a lot of lines in today's videos. This has been a big level of resistance, to say the least. And therefore, when you have that spot where you come to it on the 2016 high, and now you start to come down, you have all of this empty space to fill, and you just have one leg lower, and that's it. It doesn't go to 56 or 50 or any of this, even down to the 40s. No. Instead, it comes up to the 18, and then when it's starting to show weakness on the 18 lows, it doesn't break the short-term support at 67 2/3. And then on the this period, April 3/17 timestamp, gets to the 18 average of highs, and then for about a dozen or so months, or about a full year, maybe a little longer, it just rides the 18 average of highs, grinding its way to the higher. One nice support test here to the 18 average of lows. 18 average of lows was 75.634. The low was 75.322. So again, another very small undercut. And then from that point, gets to the 18 average of highs. The next period breaks to the period after that. And of course, we can see just continuing to break out and consolidate and congest within where this line is at. Even though it's above the line, it's pretty much at it still. So it wouldn't surprise me if this does have a decent sized green candle, or maybe it does like 5, 6, 7 in a row, sort of like what we were seeing for most of 2017 and in 2018, where it just grinds maybe over a year or so and has a decent sized gain, which would probably mean that there would be further decline amongst the silver price and gold price, thus silver losing more. Or maybe continuation of what we're seeing now, where gold just has a tremendous move and silver doesn't. And the most likely situation there would be gold has a nice 20, 30, 35, 40% rally, and over like anywhere between a day and a month, or 2 or 3 months even. And silver just goes 5% up, 4% up, 2% down, something like that. And I've seen similar but not as volatile moves where gold's had like a 20-25% up move and silver break even before. Maybe not 20 again, but like 10-15 even. So it does happen. And again, we're seeing a little bit of it now. So I'm going to end the video. Thank you for tuning in and have yourself a great day. Bye bye.